luxury being around for 3 generations, like Credit Cash or Entrepreneur Growth Capital, but being founded in 2008, I can assure you that merchant cash advance is a true purchase and a sale, if the contracts are done properly. A little introduction on us. We were founded in 2008, only offering merchant cash advance. A few years ago, we started to get into small business loans where we were able to actually look at other industries that the ABL guys and some of the factoring companies have been funding for years now. But for this debate, to discuss the merchant cash advance and the actual terms used in the contract, the way merchant cash advance works is, let's just say Joe's Pizzeria is looking for some working capital. Joe's Pizzeria will send in to us his recent credit card statements to show us what his business generates from credit card receipts on a daily basis. We will then advance money against his sales. So there's 3 key terms. There's a purchase price, a purchase percentage, and a purchase amount. The purchase price is the amount we're giving the customer. So back to Joe's Pizzeria, he does $100,000 a month in credit card sales. We provide him with $50,000. That's his purchase price. We will then agree upon a purchase percentage that we take from the customer to collect back our purchased amount, which is our included fees, not interest. The way that we do collect back is through 3 different methods, which Todd had mentioned. An ACH method where we actually manually log into the merchant's merchant account to determine what they process in credit card sales and deduct our fixed daily percentage. Or we can divert the credit card sales into a sweep account or a lockbox account, which will then actually automatically split the payments for us. And the most common way of collecting the purchase amount is through what's called split funding, where we're integrated with multiple different credit card processing companies where they're able to actually split fund a batch at the end of the night. So if a customer batches out, let's just say $1,000, and we're due 20% of that transaction, $200 will come to us, and the remaining $800 will go to the customer. But there's 3 keys to this transaction, other than the terms, that make it a purchase and a sale and not a loan. And we have done plenty of regulatory research and structured our contracts properly, where the merchant does not unconditionally agree to repay the advance. Hence, no personal guarantee. There's a validity guarantee where the customer has to agree not to breach the agreements, by getting tricky and setting up an alternative processor, or not paying his landlord on purpose, or setting fire to the business, or whatever crazy thing he decides to do. So we have no personal guarantee. There's a validity guarantee. So we, as a merchant cash advance company, assume all the risk. The second one is there is no set terms. So when we do our underwriting on the transaction, we look at their historic sales to determine what they qualify for. And we determine that fixed percentage at the time of funding. The customer signs off on that. If the business is seasonal and they have a slow month, we actually collect back less money than we were expecting. So without setting a term, we are not structuring the contract as a loan. So we call it an estimated term, or an estimated amount of time that we expect to collect back the money. We will never accelerate payments. So if we're taking 20% from a customer's credit card receivables, we will not, if they run into a slow month, Hurricane Sandy comes through and the restaurant shut down for 30 days, we don't start attacking the bank account and debiting missed payments. We assume the risk. We purchased the receivables, and at the time when Sandy came through, there are no receivables at the current time. That goes into the third point, where there is no recourse. We have a limited security interest in the business's credit card receipts. We do not file a blanket UCC or lien against the business where we have rights to additional assets, like a factor may do, or a business loan. So without any collateral, we're assuming the risk, and based on that, I can attest that we are definitely a purchase and sale.
All right, so we have one loan,